on YouTube. That's Florida Talk Real Estate LLC, home of a ton of informational chunk videos, plus the live stream on a Saturday. Thanks for being there if you are. If you're not, you can join at any time. And of course, the free download, the iHeartRadio app, that makes us worldwide pretty big time. If you don't know what worldwide means, that's pretty big time. Thanks for being there. You're always welcome to join the program. Toll free at 877-927-6969. Question, comment, concern in the world of real estate. Want to get involved in the conversation at hand? If you do, the first voice you'll hear will be the melodious tones of our producer extraordinaire. That's my brother from another mother, Jimothy. What's up?
Hello, and good morning, gentlemen. Happy Saturday.
Dude, you're amazing in here in the
buzz.
30 minutes prior. Yeah, I always hold you up on a pedestal for sure, but should be higher.
Well, thank you.
Yeah, well, thank you
very much.
Appreciate you.
Good to see you, Johnny.
Always a pleasure, my friend. Johnny C., that's me, your old buddy, your old pal, your air traffic control. Let's go ahead and get the very important people on a Saturday morning. We'll start with Mike Rao. He's the mortgage guy from the mortgage firm. Hey, what's up, Mike?
Nice.
Look at that one.
Hey.
Nice.
All right.
What's up, buddy?
Yeah, it's quite the operation here.
It is.
You haven't seen it.
Not to
much
that
of it.
extent.
Usually coming in at the tail end of
I
it.
kind of slip in. Yeah, typically.
Ross and I usually get here
That's what I
around the
heard.
same time.
Watch out now.
Yeah. Okay.
Yeah, you guys get here about the same time every time?
Yeah.
You guys hear about the same time?
He usually beats me or we're at the same time.
Gotcha.
Yeah.
Usually exact same time.
Yeah.
It was cool to see you guys.
Yeah.
I was definitely in the way, though. I was like, well, let me get the hell out of here.
Timothy didn't know what to do. He opened the door. It's like, whoa.
What are you guys doing here?
Whoa.
Busy.
He
All
almost,
three of you at once. It's like, wow, this is going to be a great day.
Wow. Nice to see you, Mike.
You too.
And again, we arrived at the same time as Ross Camaronets with Brightway Insurance, Juno Beach. What's up, Ross?
Not a whole lot. Good to be here.
That's when I knew I was early. When I saw you standing there, I was like, wait a minute. I'm definitely way earlier than normal.
I couldn't have been late.
I guess that just doesn't seem the logical assumption.
Okay.
Me being early.
I was surprised you were early.
See what I'm saying?
I thought maybe
The intro music isn't playing.
maybe
We're also we're talking about like a 7-minute difference.
Yeah,
7 to 10 minutes.
probably like 12 minutes.
12 minutes.
Yeah, it's substantial.
Johnny, you're so early. He's like 10 minutes early.
Wow, look at you. Nice to see you as always, Ross.
You too.
Pleasure. And of course, our fearless leader, 14 years, I've told you, well, plus now, that he runs a top producing Keller Williams team. It's the Florida Home Pros team. Keller Williams Innovations. Jimmy D, there's Jim DePola. Jimmy D, how you be?
Hey, I'm doing good, Johnny. I'm going to set up a little scenario. What I think happened today is Johnny was driving to the station. He's actually showing up early. He's feeling really good. He's driving over there. It's like, hey, I'm feeling pretty good today. I'm going to maybe arrive a little early. I'm going to do my normal and stop by and go get my coffee.
Oh. Everything was coming up.
Everything's going up. Roses.
Roses. Still is, though. Still is.
and then the mayhem starts. Thank God you didn't get arrested, Johnny.
Yeah, really?
I just put in, we're going to talk about Johnny C's SmackDown.
No reason to give that clown any fame.
It was funny. But anyway, I was just thinking, it's like, and then he shows up early and, then he has that incident that he had at Dunkin' Donuts.
Let's just say this. You don't know who's in a car around you and what kind of idiots react to what.
Yeah.
Just be careful.
Yeah, be careful.
Can we say this? The Dunkin' drive-through lane, it's one way. No.
Yeah, I think that's well said. Yes.
Had you been on your normal time schedule,
Yes.
you would have clearly avoided those people.
Clearly. Well, and
I mean,
that's
if
the
you're
weird part.
maybe that if that is your new time schedule, you'll run into those people every Saturday.
Well, so
So
I gotta
advise
tell
you,
you,
keep showing up late.
if it happens one more time, I'll do it again and see what happens.
After that, he's going back to Starbucks.
Yeah. Oh, that sounds like torture.
Torture.
It
Yeah,
does.
exactly.
Yeah, there goes that sponsor.
Oh, I don't know who.
Wow.
How do you drink that swill? That is swill.
no.
Oh, it's like burnt bunghole.
For the most part, where did we go recently? I think I'm trying to remember. I think we stayed out. We had to go out to Tampa, and they had a Starbucks in the hospital we went to, Moffitt Center out there, and they have ones that aren't so burnt tasting anymore now. I've
Oh,
noticed.
really?
Yeah. There are
I want to know
other
how Johnny
options, and I was surprised by that because I'm like you. I've never been a Starbucks guy because of that reason. It always tastes burnt.
over roasted.
Yeah.
They have a new
I totally-
menu feature that says less burnt items.
I know,
Yeah.
exactly.
It's on the left.
Less crispy. I want to know how Johnny. How do you know what burnt bunghole tastes like? Yeah.
That's just what I assume.
You were
Is it what
you were
had
never in the
Burning
Boy
Man one
Scouts.
time? Huh?
You were never in the Boy Scouts.
I'll show you
Wow.
the video later, Mike.
Starbucks, Boy Scouts. Sorry, you guys. Take those contracts off the table.
That's a badge that Mike decided he didn't want. See, I don't need that one that bad.
I mean, technically, a bunghole is the. Isn't it the hole on the like a wine cask?
Is it?
Yeah.
Right.
Yeah. That's what we're going with.
Right. Yeah, the burnt side.
Yeah, and then technically, if you're
All right,
doing,
nerd.
charred oak, I'm sure that's where it comes from. Now, I've never tasted it. I don't know why you have.
We're not talking real estate today.
You're supposed
Oh.
to. You're supposed to taste it all, smell it, right?
Am I wrong about that, Jim? What's a bunghole? What? I'm asking
I'm
Jim.
saving
He knows
that.
stuff.
I'm saving
I
that.
know stuff.
You know stuff. You look like you know all about that kind of thing.
I've been crazy Cornholio.
908.
Yeah. You see it, Cornholio.
Hey, Florida
Signal
Talk
right
Real
there.
Estate's looking for a new mortgage company.
Burn all the bridges. This is an example of where a perfectly legitimate English word has been co-opted.
Totally.
Yeah.
Yeah. Because
It's a travesty.
I bet you're right.
Yeah.
I bet you're right. It's the burnt. Say it again. What is it?
Bung.
No.
Oh,
On the cask. What is it?
like the hole.
It's the hole.
Where they fill and drain.
Literally,
the
where you
wine
put
cask.
the little like sampler through. You put it through
Yeah.
the bunghole.
Yeah, pretty
That's
sure.
right.
I
I think
hope
you're right
that's
about
true.
that
I think
now that
that's
I'm
true.
thinking about it.
I hope that's
Think
true.
Well, there's only one way to find out.
Google
You need to
will
go to
tell
the
you.
library, look up the encyclopedia.
You remember the
Right.
Dewey Decimal System.
There
Were
we go.
you old
That's
enough
right.
where people?
Yep.
Is it called
A bunghole is a hole.
I love when sometimes you don't have to guess, like it implies it in the
There you
name.
go.
Dictionary.com uses the word aperture.
Listen to that.
An
A
aperture.
bunghole is a hole bored into a liquid. I can't.
Bored
Liquid-
into-
You got it. You got it.
Liquor's
Liquid
coming
tight barrel.
Nice. Nice. That's what I'm talking about. That's not always true, by the way. That
So,
definition is
is
not
it-
100%.
It's used for filling or emptying its
But
contents.
is it a
Not all of them are
bung
liquid
hole
tight.
or is it just a bung?
No, it's one word. Bunghole.
Oh, bung hole.
Yep.
It's all one word.
TP.
Beautiful.
Normal.
Bung is
yeah.
just a type of hole, apparently.
Exactly.
Yeah.
Oh, yeah, that's right.
See, they should just call it a bung, not a bung hole.
And
It
this
was
is
Not to be
redundant.
confused with the glory.
This is never ever to be, by the way. This is why you should always tune in early. It may not be the most useful for your real estate needs, but it will fill in that little like need for I needed that.
So, listen, long story short, a burnt bunghole is an actual thing.
It is a
Yeah.
real thing.
Yes.
Yeah.
Yeah.
Yeah. And it tastes like in a cup if you
Yeah.
go to a certain place.
You go to a certain place for your warm morning beverage.
Right.
So,
Cheers.
Oh, wow.
Morning, Jim.
yeah, good morning, everybody. Happy South Florida. So, want to do a couple shout outs just to get into the show a little bit. First shout out is to Noel, and
Oh, nice.
Noel was able to close on his house yesterday.
I closed.
Yeah, I'm
Sweet.
I'm getting to part 2 about this, but yeah, so I just wanted to give him a shout out. This is part 2. Well, actually, for as far as Florida Talk Real Estate Team, it's part 3 of his transactions with us. He bought a townhouse with us, then he ended up buying a new home in Coral Springs as his family is growing. It's awesome.
Nice.
And then we had to sell the townhome that we helped him buy a few years ago, and that closed yesterday. So we've done 3 transactions. Very, very happy. Now, yesterday was very, very stressful. We're going to get into a new segment I have. I'm going to call it later. I'm going to talk about it later where we guess something. But I don't want to get into exactly what happened right now because we're going to use it later on in a segment. But I wanted to also give a shout out to Mike because we had a big mortgage question problem. He was not the mortgage broker on this. We were the listing agent. But we really got jammed up yesterday. We really needed to close. It was very difficult for everybody. Everybody kept their cool, and we got it done.
Awesome.
But it was really well from Mike. Really helped us out a lot. Dropped everything to answer our calls and
Nice.
everything. So thank you so much. And
Thanks,
Mike
Mike.
was not involved in that transaction. He was just there to help out. Because that's what we all do.
because he's awesome.
Well, I'll put the invoice in the.
Yeah, there you go.
Yeah.
Yeah. So thank you, Mike, and congratulations, Noel. I'm really happy
Very
that we
nice.
closed. He was very stressed out because we started at 10 and didn't finish until about 4:45, 4:50 at night.
So you were catching angles, ways to work around that the lender wasn't able to see. Is that how this was working?
They just needed some ideas on options, I think.
Yeah,
So
and
it's-
creativity.
you're exploring options.
And he
for this
gave us
particular
insights,
problem.
and we're going to get into
That's
it a little bit later. But that was awesome, and
That is
thank you so much. I'm so glad that one was done.
Seriously.
Now, the other thing is that the other thing we had is shout out to Tim and Karen. We put the Royal Palm Beach house on the market last week. We had
Pretty
I-
hot commodity.
we had 18 offers.
Nice.
I felt like it was COVID. I felt like we were back in COVIDville.
Oh,
We had
coughing?
because we exactly right. It's common. We had 18 offers in 3 days.
Was this Mac Daddy?
No,
This,
that's
lot
it
of-
was
lot of
priced
deferred
correct.
maintenance?
It was priced correctly.
Well, that's
So we're going to also talk about that a little bit later in the segment, but I wanted to give them a shout out. Everything's working out. I'm knocking on wood. We have the inspection on Monday, but I'm not really worried about it.
great.
But they did very well. And thank you for trusting me to do the job, Karen and Tim. And I'm looking forward to get this one closed. And they told me when I met them, they said, Jim, I want to sell this super fast and I want to be out of hurricane season. And I said, that's June 1st. Right. And right now we're set to close May 28th. So
Let's go.
So anyway,
Let's go.
No
pretty-
pressure.
pretty cool. Yeah.
We got this.
Exactly. So we got it done and very happy with the pricing and everything. So
Good.
everything's excellent with that. Thank you for trusting us. Anybody else out there that has real estate needs or questions, give us a call. I'd love to talk with you. Okay.
FloridaTalkRealEstate.com. FloridaTalkRealEstate.com.
Okay. So I wanted to, I guess we're going to do this segment right now. I forgot when I wrote this last night because I was so tired. I didn't wake up. My alarm didn't go off today.
Oh,
Everything
no.
was screwed up. So I'm going to call this segment right now. We got to come up with a better thing, but I'm going to call it Guess What Happened, right? That's the segment. That's pretty lame, but
You got to hear it like this.
I mean, but
this
you
is,
can.
This is how you hear it. Guess
yeah,
what happened?
I like-
exactly.
I like
Save
happening.
that. Save that. We'll use it. Yeah, we'll put
I think
That's
if
how
you
you
make
hear
it
it.
happening instead of happened, it's just sounds better. Do it again with
Guess
happened.
what happened?
Guess what's happening?
No, guess
funny.
what's happening.
Yeah, guess what's happening?
Oh, I thought you just said what.
no,
there
instead of
you go.
happened, it's happening.
Yeah,
Just-
guess
it just
what's
sounds a little
happening.
better.
I think both work.
Okay.
Mm-hmm.
Yeah.
So let me just give you some. We kind of already know. I kind of screwed this one up. It's the first one, but I'll
Let me
next
guess. Hold on.
next week.
We're going to talk about some issues with closing.
Yes,
yeah,
right. So we're
okay.
going to talk
That's-
about
yeah,
what
you're
happened
good
with
at this,
Noel
man.
D's
Yeah.
situation.
I did it.
Okay.
Is that the
So
game?
just to set the scene, we're on the listing side of selling the townhome. So we're the listing agent, right? Beautiful unit. He really fixed it up really nice. It's priced correctly. It's at the upper limit for that neighborhood. In fact, we're asking to set the record of the highest unit ever sold there.
Okay,
right?
but
And,
that's nothing new to you. You've done that over the years.
Yes.
but it is tough to do in these times.
yes, yeah, it's a little tricky, but
Yep.
his unit I felt deserved it, and we were going to go for it.
Okay,
right.
all right.
So we put it at the
That says so.
record-setting price for the neighborhood of all time.
There's also some additional pressure, Jim, because this was your traditional like seller buyer scenario,
Mm-hmm.
but they ended up in a good lesson in like how your team really has to work together because they started out as seller buyers, meaning they had to list and sell, you wanting to use the proceeds of that, all of that, all of
Yeah.
that good stuff,
Dealt
and
with
then
dance.
they had an opportunity on their purchase that wasn't going to allow them time to sell their home. And the number one was, can they do it? How did they structure the loan to do it? And then, coordinate it. But now he's already bought his other home. He's carrying 2 homes. This closing is pretty important.
No pressure, no diamonds.
No pressure.
That's right. It's
No
not diamonds or
pressure,
mint.
right? Nothing to worry about. Nothing to worry about. So we priced it correctly, but we actually got it under contract very quickly. And that person was going over to Mike because this property was able to get that $15,000 lender
Smart
credit,
start.
which we're going to talk about later.
Yep.
I know there's an announcement on that.
Sure.
So what happened was we found out during that negotiation for the buyer that there's a roof assessment coming. And the owner had no idea. And it took us about a week to figure out what was going on. And the short story on that was the community already hired the roofing company to do the roofs in the whole community, but they haven't actually picked a date or set the assessment per unit because the community wasn't ready to do that yet for whatever reason. So we knew an assessment was coming, which means legally the seller has to let the buyer know that.
Okay.
But we had no idea when it was coming or how much each unit was going to be responsible for.
Gotcha.
So the buyer walked, right? So that buyer walked. So now we're putting the property back on the market, and we were offering. We figured out what we thought the assessment was going to be, got it confirmed with one of the board members, and it came out to. I'm making up fake numbers on all of this stuff, but let's just say it was $20,000 per unit, right? So what the seller did is we kept the price at the same price, but we agreed that we were going to offer $20,000 for the roof credit. Okay. So then we got a second buyer, very interested in the house, brought him over to Mike. Didn't really want to go to Mike, but he wanted that 15 grand. Who wouldn't?
Oh, for a
And
smart
then
start.
went to
right.
Mike.
Wow.
Mike did really good work with him, and they found out that they couldn't use the credit for whatever reason. We don't need to get into that. But what happened was, so then they, instead of sticking with Mike, they jumped back to their original mortgage company.
Okay.
Now,
Which was fine. I kind of, said I did one thing. If Jim sends me somebody, sometimes it's like, hey, we just need a second opinion. Like, what do you think? They're willing to talk to you. In this case, Smart Start was like, hey, if you can do their loan, then Smart Start applies. So I was able to do something, but it wasn't Smart Start eligible. And so I said, but so if you're happy with your existing lender, like they didn't really want to talk to me in the first place, but the Smart Start made them, make that call.
Right.
I said, just, you're fine. Just like, if you're happy with your lender, I'm basically going to be doing the same thing they're doing. So, you can stick with them. No problem.
And Mike never told us any real financial information because that's unethical. And he never does, even with the clients I work with directly as a buyer. He doesn't tell me that stuff. I don't need to know that. I just need to know, hey, Susie's good for this amount of money. Go find her a house, kind of like that.
I see what type of loan they're doing. I would be doing the same type of loan. They should be just
right.
Everything looked good to you.
But Mike did say that they were self-employed and that the loan was going to be kind of hard to deal with, right? It wasn't going to be an easy, just jump through it kind of thing, right? So, the closing was pushed off a whole month, week by week, by the mortgage guy, right? This mortgage person that we were working with, very lackadaisical, didn't really care it was taking so long, had no consideration for anybody in this situation. He was responsive if you called him, at least he didn't hide, but he just didn't care, and he was so cool. So anyway, we finally get the approval, clear to close yesterday. We're all happy. We're a month late, but we're closing it. And me and Noel meet at the closing table in Coral Springs. We close. We're all happy. We're finally, wow, this is over. It's done. I'm driving back from the closing. The buyer's supposed to come at 3. I'm leaving at 10:30, and I get a call at like 10:30, 10:35 from the agent panicking, saying, we got a big problem. The buyer doesn't want to close because now they have to bring an extra $10,000 to the table. And just being told this morning, right, the day that we're closing, because the mortgage company didn't handle the amount of credits that the seller was given, the $20,000 that we gave the buyer. They couldn't use it all. So because you're only allowed to use it for certain parts of your closing costs, down payment, and prepaids.
Right.
So they had too much money. So they said he doesn't want to bring an extra $10,000 to the table because that extra $10,000 now it was $10,000 too much. So that 10,000 on that 20, in this case, they only used 10 of the 20. So they had 20 they couldn't use. So they told the buyer, we don't have that extra 20 for you. So now you got to bring the extra 10,000. So we're just going to give that back to the seller, and you're going to have to bring 10,000 of your own money to the table. And he said he didn't want to do that, and he felt that the mortgage company was very unfair to drop this the day that they were closing. And so everything got very heated, and Noel needed to close. I couldn't tell, so I kept asking the buyer's agent, are you telling me that the buyer doesn't want to close, but they could? They have the 10,000, but they just don't want to bring it to the table? Or are you telling me they don't have the 10,000 and they're stuck and they don't know what to do because they don't have $10,000? And she was, even though I got along with her great, she was very evasive and wouldn't answer my questions on that. So I felt like they could close, but don't want to. And they were asking the seller to eat the $10,000. They were coming back and saying, I don't want to bring the other 10. You eat it, right? You lose the 10,000, right? So we went round and round for hours. It took us like 6 hours to get through all this. Phone calls with Mike, multiple phone calls with the mortgage company. Okay. So they didn't know how to use this money. Now, Mike had done this a week ago Friday for one of our customers.
Yep.
Yeah. And we had just done this exact situation a week ago Friday, just to give you the difference of working with Mike versus working with this other guy that the buyer went back to. When Mike had too much money, I watched him for 3 days calculate ways to use that money and then calling the underwriter and find out if it was kosher or not.
Right. Maybe buy down a rate, or what else were you trying to do?
There was an additional complication. We were using down payment assistance, in which case, once you've given an earnest money deposit, you can't get it back. It's a weird situation. But here's the scenario, because it's kind of hard to follow. So the first premise is you can't use other people's funds towards your down payment. You can only use your own money or down payment assistance programs towards your down payment. So if you have other people's money, such as a seller credit or a lender credit, right? We call those interested party contributions. They're parties to the transaction, but it's not your money, but they've given you a credit. That can never exceed your total closing costs and prepaids. So in Jim's scenario, where he said they've negotiated a $20,000 seller credit, but their closing costs and prepaids were only 10 grand. So they've negotiated 10,000 too much of money that they can't really use anywhere. And so what you just said is like, okay, yeah, buy down the rate, right? So what do you have to do? If you increase your costs, you make your closing costs more than 10,000, then you can use the money for it. So increasing your cost by 10,000, buy down the rate. That's a great idea, but it doesn't change the fact that the borrower, up until the close date, thought that he was wiring $10,000 less than he has to wire. Right. So you can increase the costs. Good. You get a benefit of that. You still have to wire the money, the number that's 10,000 more than you thought yesterday.
Right.
That was the challenge.
And emotionally, the stakes were so high. That's the finance part, which is super important.
Yeah.
And this is like last second
This
stuff,
is
too.
last second. And
Yeah.
here's what I found out. First of all, I have Noel, who's like, sell the house, sell the house, sell the house. This is taking much longer than I thought was going to close. And he's getting tight, right, financially. Now, the buyers, what I find out during this whole conversation, they found out the day before they were supposed to close that they had an emergency health issue with a family member in another country. And they were booking emergency flights that day of the closing to fly out to help the family member. And they knew they were going to need cash when they got there. And now they have $10,000 less than they thought they were going to have to close on this house. So their stakes were really high too.
Sure.
So nobody was really being unreasonable. Like the buyer, they got slammed with the unexpected. I felt bad for them. I felt bad for Noel. The only person I felt bad for, the agents who were very professional. The only one I didn't feel bad for, the mortgage company, because they had made so many mistakes up to that point. And now when we were at the end, no apologies, no mea culpa. didn't offer to do anything to correct it. So I called Mike. So the first thing, I'm going to give you 3 ways that this problem could have been fixed. And then I'm going to say, guess which one they fixed. Okay. So we're here all nail biting, biting our nails, trying to figure out how this is going to work. Might not close, might not even ever close, right? The whole thing might just fall apart. And nobody really wanted that, but it could have. So
I
option
already feel like I know what happened.
option number 1.
Ugh.
Option number 1 is to drop the purchase price of the house by $10,000. And then instead of offering $20,000 credit, we only offer 10, right? And then that way the seller still gets the same amount of money. The buyer's paying 10,000 less for the house, but they still got to bring the extra money to the table, right? That's option number 1.
Yeah, the price reduction doesn't change how much cash is required much. So that $10,000 that was a seller credit would have left $10K in my pocket. The price reduction doesn't.
It's
give me the
hundreds
same
of
thing.
dollars.
From the buyer's perspective, it's still I got to bring 10 grand.
Yeah,
to
you
the
still
table.
got to
bring
bring
the extra
10
money.
grand.
Nothing's changed.
So
Yep.
that's option number 1.
That's not an option.
Option number 2 is to use the excess money that couldn't be used. And this is what Mike did on the last deal, which I thought was, I didn't even know that you could do any of this. This was a whole learning experience. And Mike never told anybody while he was doing this. He just did it and then told us the end result. And he went back and forth with the underwriter. And then he found out that the money excess from the week ago Friday deal, he took the extra money and gave it back to the seller. And then the seller paid advance HOA payments for the buyer.
Awesome.
So the buyer didn't have to make HOA payments for quite a while because they had the excess money used. But that way, everybody was happy. The money was used. So the option for this person,
And we were just to put it in context, we had, like hundreds of dollars to figure out, not 10,000,
not 10,000.
right? We had like $600 or $500 to figure out.
So Mike tells me, yeah, you could do the HOA thing, but it's $10,000. And I figured out based on the monthly HOA fee, they wouldn't have to make an HOA payment for like 2.5 years, right? Which is pretty cool.
That's money in your pocket.
Right. Now you're saving the monthly HOA fee.
Yeah,
but
you
it's
still gotta
over,
bring the
but
10K.
it's over time. You still got to bring the
Still gotta
10K,
bring it.
but now you're getting the money back over time, right? So the other option, then there was a third option. And the third option I'm not talking about on air, laugh out loud, because I don't want to talk about it. It wasn't the most ethical thing. And it was the mortgage person that asked us to do it a different way. And I didn't feel comfortable with that at all. So Mike gave us, they didn't even know about the HOA option at all. And the mortgage company, the mortgage lender person learned something and started right away talking to the underwriter. So we did close. That's why I screwed up the segment. I was like, did we close or not? And then what happened? So of the 3 ways, which of the 3 ways do we do it? And I already told you that we didn't do it the unethical way, right? So that was 3. I already kind of gave that away. But I wouldn't go on air if I was if I was doing that. I was like, I don't think this would be a good segment. What do you guys think happened? Which of the ways do you think they
Now,
did
Johnny mentioned another way, which was to increase his cost, right? Like basically just take the additional. So you're not leaving money on the table, buy down the interest rate.
it?
Take 10,000, get a nice chunk, big reduction in your interest rate. Doesn't solve that they have to bring 10K, but none of the solutions solve that problem. So
I'll go with you first, Mike. Okay. So what do you think happened? You could bring in that one if you want.
yeah, maybe even a combination of that, some sort of HOA money and an increased cost.
What do you think, Johnny?
Yeah, I like that perspective. Like spread it around a little bit because both have a nice value, and the value, one's a little more instant, one's a little more long term. I don't know.
What about you, Ross?
Prepaid HOAs.
Prepaid HOAs.
Yeah, that's what I'm thinking
Prepaid
too. It seems
HOAs.
to be a little bit of a trend.
Well, actually, Johnny, once again, always amazes me about his
His
innate
intuition.
real estate knowledge because it's just learning from hanging out for a while.
Well, he was in the industry under one of the best.
They actually
Wow,
raised
great
the cost. they actually raised the cost. And Mike did talk about that as an option, but I didn't really focus on it that much because it didn't, I'm being honest with you, in a way it didn't make sense to me in the way the deal was going. Now the buyer, what happened with the buyer, they try to play hard and just say, we want the 10,000 from the seller anyway, and try to drop the price $10,000 on the seller. But the buyer's agents and the mortgage company were not explaining to the buyer that they were already well past their loan approval, right? And if they didn't close, they were going to lose their escrow deposit, right?
Yeah.
And they already paid for an inspection and appraisal. How much is an appraisal, Mike, roughly nowadays?
$550.
Oh, I say $500. Okay,
Yep.
so between the inspection and the appraisal, let's say it was another 1,000 just to be conservative, right? So now, most of that 10,000 that they didn't want to bring to the table, they were going to lose if they didn't close, right? So they were in a tough jam too,
Right.
because my seller was severely damaged if they didn't close.
So they didn't have the best people working for them, unfortunately. But
So at 4:55, I got a message saying that the money's wired and that we got the clear to close, and we did close yesterday. It was a really wild one. And this is the point I want to try to make about the teachable lesson here. The reason why we took that buyer, even though that we knew that they were going to have a hard time with the loan, we kind of knew the loan was going to be hard, was because we didn't have anything else going at that point, and they gave us a very good offer, and we just found out about the roof assessment we didn't know, because that would have factored into how we were going to sell the property, and we already fell apart on one deal, and this has taken longer than what Noel needed. So we had to jam it through. But having the team behind you to talk about this, I've done this with Ross many times. We have a big time insurance question, and we're trying to deal with that, trying to get the deal, maybe not at the day of closing, but as we're leading up to closing, I call Ross and get information all the time.
yeah, that could be a deal killer.
So, and this is just showing you the difference. Thank God the agents on the other side, they were very professional also, and they
Yeah.
really understood stuff.
Good.
And everybody's trying to close, right? Like
and
that's the
everybody's
thing. So
except the mortgage,
except the lenders, like I
except
don't
the
care.
lenders, like, well, I'm sorry that we're going to have to go through this. I guess you're just going to drop the price and not get the 10 grand. And that's what they kept telling their customers.
Jeepers.
Right?
Well, they would have got the 10 grand in that way because you're dropping the price. So
yeah,
it's
but
like you've negotiated more money than they can apply to their deal.
Right.
And it's a tough one for agents because probably I think that price was 400,000. You said your credit was 24,000. That's exactly 6%. So you probably had a question early on, which was like, hey, what's the max seller credit we can do? And the answer to that, oh, for this deal, it's 6%, right? Which is a legitimate cap on a credit on an FHA deal or a conventional deal with the bigger down payment. So it's like, okay, 6% seller credit, easy peasy. You forget about the other limit. You can't exceed your total closing costs and prepaid. So what they should have done in the beginning was say, hey, listen, you got this big credit. That's more than we can use. So we need to increase your costs in order to do this. How are we going to do that? We're going to buy down your interest rate, right? We're going to do something like that so that you're able to utilize all of the credit you negotiated.
Or
But-
most of, at least.
But you
right?
have to do it in a way that it was within the constraints of how much you can use. Had they done that early, the buyer would not have been shocked that their total cash to wire on the closing day was 10 grand more than they thought,
Mhm.
right? They would have understood it, been able to make decisions, would have been before their loan approval deadline. There wouldn't have been any risk, and they could have backed out gracefully at that point or decided like, yeah, that's fine. This is the way it is. And I don't expect real estate agents to know all these rules about interested party contribution limits and all that. Jim knows, and I'm sure they asked that question. That's how they got this a 6% credit, right? It makes logical sense. So what I would tell agents in general is like, listen, there are rules about this stuff. I don't want that to impact you extracting as much money from the seller as you can, right? As the buyer's representative, I said, just negotiate whatever you can. We'll figure out how to utilize all of it one way or the other. We're going to do that early on. It's not going to be a last minute. The thing with Josh, it kind of came up and surprised us because we were just at several $100s more than we could utilize. But so it's a tough one. I understand how you got into the situation. The problem was it didn't get spotted until last minute. And then you have somebody who's not really super interested in solving the problem. It sounds like he's just like,
Yeah.
oh, you guys figure it out, which, you know,
Yeah.
he should have been number one guy involved in or gal involved in solving the problem.
Yeah, most motivated. This is what I do. I close deals.
Yeah.
Yeah. It was pretty crazy. And this just shows you that having people that are in production all the time and dealing with a lot of different things, that they can kind of jump in and take care of all this stuff.
It means everything. It
Yeah.
does.
So it really worked out. But these are actually everyday things that happen. And that thing was an 8-hour, 6-hour, 7-hour. Don't know if we're closing today or not. And it was just really, really
That's
tense for
rough.
everybody.
Yeah.
But
There's a lot of bald people in our industry.
bald people.
Yeah, like pulling their hair out.
Yeah,
losing hair,
yeah,
right?
exactly. Let's go ahead and take a break. On the flip side, we're going to talk about becoming an accidental landlord. And then besides talking about that, one of the things I want to talk about is if you do become a landlord, let's say you're renting a single family home or something, what type of insurance do you need? And does it affect your insurance rate compared to when you lived in the home versus when you rent it? We're going to talk about that on the flip side.
Excellent. Go ahead.
Yeah, you have to wrap up the segment with the
Game
the
show
tagline
end?
again. You have to wrap. And that's
what
what's happened.
happened.
That's what happened on this week's.
That's
episode
what
of
happened.
That's What Happened.
That's what happened.
That's right. And thanks for tuning in. We'll see you next week on Guess What's Happening.
Yeah.
That was fantastic.
Okay.
We do this every week.
Yeah, we'll try. Or every week I have a good one.
We'll try to get that professionally Jimmyized.
I have another one, or later today. I have one more.
You like how I just volunteered a bunch of work for you?
No problem.
Another game.
Yeah, I have another one.
Okay.
Yeah.
I love it. We are live on second day of May. By the way, it's May already. Crazy to anybody else, or is it just me?
2027 is right around the corner.
What the hell's happening?
Mm-hmm.
Did we hit like a turbo?
Year is one
It feels
over.
like it.
It does, doesn't it?
I mean, school's almost out, right?
End of the
It
month.
is. It's like another
College
month.
kids are wrapping up finals weeks, like this past week and the next week.
I think it's Florida State's graduation this weekend.
There's
Somebody told me they were going up because their daughter was graduating.
Okay.
So
yeah, that sounds about
So
right.
they just open a bunch of Cracker Jack boxes and throw them around everywhere.
Oh, nice.
yes,
All
they
right.
do.
The,
But they do it inside Doak Campbell Stadium.
The high school seniors are pretty much
Are you
checked
really
out.
painting that field that god awful scarlet? Is that
I'm
true or
not
is that
paying attention.
AI
I just like
mess?
that. I have no idea.
You shouldn't pay attention if that's real. That is god awful if that's happening. Sorry to bring that up. If that's real, we need to see if that's real. You see that, Timothy?
No, I haven't. It's the first I've heard of it.
So you know how Boise has a blue field,
Right?
If it's real, Florida State's going to go with a scarlet field.
It's
Really?
called Garnet.
Garnet, sorry.
Garnet.
Oh, it has a weird
Yeah.
pop.
I think it would be hard to watch.
It has a weird feel. It's going to take a lot of getting used to.
I mean, they've been hard to watch for the last few years. So
Oh, well,
Oh no,
That's
that's
good.
good. 2 years ago they were contending.
yeah, they were.
Made
Yeah,
Johnny's
yeah.
day.
That was good.
Remember the first year, the White House, the first Trump administration, when Melania did her Christmas decorations at the White House, and it was all like red trees.
I do remember that. It was
Yeah.
still beautiful, but it looked weird.
It was different than
Very
than
different.
normal.
Yeah. And maybe that's all it is. It's just different. Takes some getting used to, but man, it's hard to look at.
It's very easy. Like all you got to do is the TV contract guys got to be like, yeah, that's never going to work.
That's bad.
Yeah.
What do you got, Timothy? Is it real?
From everything that I can see here, yeah.
Oh,
I
boy.
mean, there's a bunch of articles and Facebook posts and things. But see, that's the problem. They're like Facebook posts or
Yeah, so that
not,
doesn't mean
or
it's
an
real.
Instagram post. So that doesn't mean it's real.
It
Sounds
does.
like they're
Or
stirring up
Reddit.
publicity.
does it?
Yeah, that does not make
I'll check it out on Perplexity.
Excellent. That'll make it better. Thank you. Where was I? Oh, yes. FloridaTalkRealEstate.com. Oh, it's May 2nd. That's where I was. Craziness. But thanks for putting up with our nonsense to get through the very important details on a Saturday. And when I say our nonsense, I mean me and Timothy predominantly. FloridaTalkRealEstate.com. When you want the most important people. Yeah, Mike. Yeah, you're definitely not
Nonsense.
out of the crowd. That's a resource for all your professionalism, real, true professionalism, pros, experts in their field. And you get them all one click away, floridatalkrealestate.com. You got a hotline, you can call it if you'd like, 888-973-7828. Remember, on Facebook and YouTube, lots of ways to be in touch. If you're buying a home, selling a home, stuck with a home, don't know what to do, anything that touches the world of real estate, and you need a pros pro, floridatalkrealestate.com. floridatalkrealestate.com. Know it, use it, love it, share it. We're back in 4 minutes. Thanks for being with us every Saturday right here on Real Radio.
What's a Real Radio podcast? It's Real Radio on demand. Find your favorite show at realradio921.com. Here's what's happening with the weather on Real Radio.
Temperatures are climbing, and they are climbing quickly. Under a mostly sunny sky, we'll see temperatures getting into the middle and lower 90s this afternoon, so quite a warm afternoon. Heat index values getting into the upper 90s when you factor in the humidity. We are expecting rain chances to increase tomorrow, bringing temperatures down to kick off your work week.
This report is sponsored by Mattress Firm. Ready to upgrade to the perfect sleep setup? Let Mattress Firm sleep experts guide you to the perfect bed at the Memorial Day sale. Top brands, ideal comfort, score unbeatable deals on both. Mattress Firm. They make sleep easy.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rao from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rao will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rao, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Yeah, you're more than welcome to join in. Absolutely toll free. 877-927-6969. Get involved in the conversation at hand. If you have a question, comment, concern, the world of real estate, don't be shy. Jimothy will line you up there. At least I believe you will.
Absolutely 100%. And good morning.
Good morning. Thanks for everything always. Jimothy, our producer extraordinaire. Johnny C, that's me. Look at that. Phone line starts ringing instantly.
Just like that.
Yeah, she get the numbers more often. We'll see if that ends up on the air or not. Johnny C, that's me. Always great to be here with you. Your old buddy, your old pal. We got Mike Rao, the mortgage guy from the mortgage firm. He's right over there. If you don't believe me, check out Facebook or YouTube. There's a camera right in his face. There he is.
Or if you're listening, this is me.
There he is.
Yeah.
Hello.
Good morning.
See,
Happy May.
when you're just listening, though, like you'd be sitting in your bedroom. So much like not really all together in a studio so much now, I think. People are just in different places now.
Yeah. Yeah. People are everywhere.
Yeah. It's good to get together on a Saturday, you know what I'm saying?
Oh, yeah.
Like with Ross Camarinats with Brightwing Insurance, Juno Beach. He's over there. Look, right on camera as well.
That's right. I'm here.
There he is.
Yeah, I didn't like it when we were like during the COVID
Zoom
times and we were in separate locations.
I was going to say when we were on Zoom, but we were on StreamYard.
Yeah.
We were.
Yeah.
Yeah.
So we were StreamYarding, but from home.
But from home.
Yeah.
Yes. It's just total different vibe.
Yeah. I would actually go into the office and do it.
You did, huh?
Yeah. I just can't do any like work from home at all.
Oh, it's
I don't
interesting.
like
I
it.
work from home almost exclusively.
Exact opposite.
I need a place to go. Same thing with the gym.
An escape.
Yeah.
Yeah.
I need to go, like, you go there to do your work. You go to the gym to do your work. You know, like I need to go somewhere to do.
There is work to be done at home. It's just not work, right?
Yeah.
Right.
That's never ending.
It is never ending. You're
Yeah,
right.
that's the one thing we don't talk about as a homeowner, Jim. How much work it is to own a home.
True. Yeah.
We don't talk about that much.
Did you ever fix all the siding in your house?
Yeah. Well, I had people come out and do the
You had people do it?
the Hardy
plank?
Hardy plank siding.
Yeah.
That stuff's awesome.
Yeah.
I love
I
Hardy
mean, it's
plank.
been great. So it looks exactly the same as the day it was put on.
It's really good stuff.
Yeah.
That stuff's fantastic. There's Jimmy D, Jim DePolo
Oh,
with the Florida Home Press
right.
team, Keller Williams Innovations. Also a fan of the Hardy board.
Yes, fan of Hardy Bark. I put it on myself on my house.
Or
It
Wonder
was
Board, as
really
it's
good.
been known.
Yeah.
We me and my at the time stepfather, he did all kinds of that kind of work when I first moved to Florida. When I was going to Connecticut School of Broadcasting, I was working with him, and we did a house. We actually lived. He negotiated this deal where we lived in the house while we kind of did a lot of work on it, and we did Wonder Board around it.
Mm-hmm.
And I always remember the boogers more than anything, because if you didn't wear a mask when you were cutting it, it was a lot of like concrete dust. Yeah, it wasn't concrete, but
it was concrete.
Fiber.
It's
Fiber.
type.
Concrete
cement.
fibers.
Cement.
yeah,
Or
really.
fiber cement.
Strangely, I remember the boogers were very like concretey.
Oh yeah.
But we threw some in a bucket of water the whole time to see what would happen to that piece. And we left it in there the whole time we renovated that house, and it absorbed none of that water. That stuff was amazing.
It really is.
Yeah, it didn't puff up like at all.
When I did it, I painted the back with a primer, and then I painted it all before I put it up. And then after I installed it on the wall, then I went back and painted everything. I caulked and painted it again.
Nice.
And that shell of that house lasted
Still
16
there.
years. Yeah, like 16 years, and it looked perfect.
Oh yeah. Oh
Yeah.
man, I remember just running beads, lines of the caulk on those things after there's a lot of Wonder Board around a house, you know what I mean? It was like a 5-bedroom house.
Yeah, exactly.
That's good stuff though.
Yeah. Hey, I want to
Buy a
get
commercial Wonder Board.
Yeah, I know. Yeah, exactly. Sponsor us. Wanted to talk. I was reading this article, Ross, about Tampa Bay homeowners who are turning into accidental landlords, and then it got me to thinking about this one guy. I tried to sell a house for in Port St. Lucie, probably in 2023. It was a little slow. It was right after the COVID surge, and they really thought their unit was worth more than what it was worth, and they had a solar panel system on the house. And they were expecting the new buyers to take over the solar panel costs. Nobody was going to do that. So we had a house on the market for through the whole thing, and I think it was one of my few expired listings that year.
Oh.
And then they decided they were going to rent it. And I said, if you rent it, you've got an older roof, an older AC. This isn't going to get any better over time. And your price appreciation, if we get normal price appreciation, it really isn't going to make up the difference. And you're going to be renting it, which means the inside of the house is going to be not the same as it looks right now. So there's like, nope, I'm renting it. So now he's on his third rental agreement, right? Now I'm not his agent for that. But I went back and looked at his house when I read this article about what's happening in Tampa. And when you look at the property appraiser to see what they think that house increase or decrease assessed over the last 3 years, it's only increased like 1.2% over the 3 years, right? From the property appraiser's perspective. So the house isn't gaining any value. It's getting older. I knew that what his mortgage was, what he's collecting in rent, is not making the mortgage payment and the solar panel payment. So he's actually losing money every single month, right? And I just don't see how he's going to make more money in the future, right?
Is that whole area on that kind of same either depreciating or really low appreciation?
It's a wood frame home, right? Which and he's competing with all these new construction homes right now at his price point. He doesn't have a pool to make up the difference because some people is like, I'll take the resale because I want the pool.
Right.
And he has actually a burden because he's expecting the buyer to take over a very expensive solar panel system he put into the house. So the numbers just don't work on any level, right? But they're doing it because they think in the long run it's going to make them more money. Now, I'm not an accountant. Maybe he makes lots of money other ways and that this is a depreciative situation where he's just doing it for the tax depreciation or something. I don't think so. So these people in Tampa, what they're saying is Zillow did this search, and what they said is that 3.7% of the Tampa rental listings used to be for sale. So what it's showing is that they were on the market, couldn't sell it, then they turned it into a rental property, and they're trying to get it rented. Now, the national average right now is 2.3%. So this is about 50% more than the rest of the country of people that put their houses on the market and then switched over to turning it into a rental. Now, the reason why I'm bringing it up is for two reasons, but I want to get in the insurance stuff first. They talked to this guy who bought a property in 2023 at South Pasadena near Tampa. It was in one of the areas when the hurricanes came, the neighborhood flooded, but his unit was his home was one of the few homes that did not flood. But a lot of properties around him did have severe water damage. So he said, we had it so they decided they were going to sell. He says, we had it on the market 2 times over the last 13 months. And due to the market, the prices, and the amount of inventory, it's been very difficult to sell. So we rented it once for 9 months, and now we're in the process of furnishing it, and we're going to rent it again, right? So then he said, our house didn't flood. We were one of the few houses in the neighborhood that didn't flood, so we were able to move back right away. But a lot of our neighbors did move back for 12 to 18 months. And then he said that, but turning the home into a rental came with some unexpected added costs, especially when it came to the insurance. He said originally our insurance was somewhere around $5,000 a year. And then after the hurricanes, it went up. But when we decided to rent it, it went up to about $11,000 a year is what he's paying. And that's not including flood insurance. So I was just wondering, that got me to thinking, I wonder how many people, when they're owning a home and they're living there or something, or they're using it for a vacation home, but not renting it out, and then they decide, I'm going to turn it into a rental. My first question is, Ross, should you tell your insurance company that you changed from a regular home? I don't know what house.
Owner
occupied home versus a rental home?
Yes, you should.
How come?
It's a different policy. So your owner occupied policy specifically covers you for owning or occupying the home. And then they've got what's called a DP3 policy, and that's for when there's tenants involved.
And if you didn't do that, and then something happened to the house, the tenant has a pot stove, stove fire or something like that, and there's
Pot stove.
Stove.
yeah, pot stove, right? Yeah, they're making meth in the house,
making
right?
their
The
biscuits.
meth
Yeah.
lab,
All right,
breaks
so they're
in,
making meth.
and it blew up.
I had
Is
a
that
guy-
insurable?
Real quick, I had one of my clients was renting his house, and the renters turned it into a grow house, and like it got busted and all that, and it was a big deal.
That's when having the solar panels would come in handy.
Don't you hate it when that happens? Don't you
That's how
hate
you
it
get
when that
caught.
happens when you pick tenants and they become Breaking Bad?
Yeah,
I
right?
hate that.
I was thinking about the solar panels. So if he went through the expense of got a loan to install solar panels on his house to save money on electricity, and then he's renting it. How do you save money in that case? Because the tenants have their own electric bill, right? But then they're not paying anything because they got the solar.
Yeah.
Well, the solar part was done when he was living there. Right?
Yeah.
I know, but he did it for like a long-term thing.
Yeah, he
and
thought
then-
he was
and
going to
then-
be there for a
and then
very
when you
long
move
time.
out, right?
Yeah.
But- okay.
So
back to Ross.
if you didn't do that and then something happened at the house and then you file a claim, would the insurance company even know that it was being rented?
I mean, they're going to
once
do
they
it.
find out.
Yeah, I mean, they're going to do an investigation, and if they're
Yeah,
not living there, they have a. I
I'm
mean,
not trying to get around. I'm
that-
just asking.
that
I'm
gi-
not-
I mean, that
I'm not
would
trying to-
definitely give them, a reason to deny the claim for sure.
Oh yeah, right. Quick, right.
So
But
when
most insurance companies don't do that. They don't deny claims.
that never happens, right?
Right.
They give you more money. They give you more money than you ask.
Let me ask you this. So let's say you're living there, you got a standard HO3 policy, a whole house policy for owner occupied. And then you move out and say it's in the middle of your policy period and you don't even think about changing things up. Have you breached your contract at that point because it's no longer owner occupied?
I mean, things change, right? So, I mean, it's not like something where it definitely needs to be rewritten as a tenant occupied property at that point. Now, a lot of the times when, one of our clients will call the actual insurance company and say, hey, this is now tenant occupied. And if it's like midterm, they'll say, okay, your policy is going to be non-renewed.
Okay.
They don't cancel it, but it's going to be non-renewed. But at that point, we want to write them a tenant occupied policy so it's written correctly.
And then is there one other type that's like a vacation? You mentioned second home or vacation home, maybe it's like you're not there all the time, but it's not tenant occupied.
So it's just that's when you're just talking about is it going to be a primary residence? It can be, is it going to be the tenant that's occupying it? Is it going to be their primary residence, or is it going to be a secondary?
It would be a secondary home. Let's say they live in New York, but they have a place down here and they come down every couple of months and crash out. They don't rent it out.
Empty most of the time.
Right. So that's typically written on your HO3 owner occupied. But if it's going to be a second home for you, and while you're not occupying it, you're going to be renting it, then it needs to be still written as on the tenant occupied form, but the occupancy is owner occupied secondary.
Okay. And then
Makes
It's basically secondary with rental.
Makes sense.
Right? Secondary with a rental.
would there be any kind of difference for landlord insurance? I'm calling landlord insurance. If you were doing a daily rental versus monthly rental or annual rental?
Yeah, I mean, the rental period. A lot of companies only want an annual rental. Some will do minimum of 30 days, but then you're starting to narrow your pool of carriers as you lower your rental period.
Well,
So when you get down to that one day rental period, the amount of carriers that are willing to offer coverage gets pretty
it gets
small.
really small.
Like an Airbnb. Would
Yeah.
that-
Mhm.
Okay.
And I assume that if you have less carriers, that means more money, right?
Yeah, I mean,
Of
definitely
course,
there's
right?
not as much, a difference in premium to choose from. So kind of what is available is what it's going to be.
And would you say, I know it depends on the value of the home and the replacement value and all that, and where it's located. But do you think it would be about double what you're normally paying, or less than double, or it could be more than double?
Could be less.
You know,
Could be cheaper.
each location is going to be different,
Right.
right? You know, in the acreage, and again, are we talking
Shout out.
annual rentals? Are we talking short term? Or, what do we? If we're just strictly talking an annual rental, if you're in a location where you're going to have more carriers offering coverage in general, then the premium on the rental policy may not be different. It could be less than what you're paying on the owner occupied policy, because typically you don't have any personal property contents coverage unless you are renting it furnished. But most annual rentals seem to be unfurnished, so you don't really have as much content. So because you drop that number and then change it to a rental, sometimes it's cheaper, sometimes it's about the same, sometimes it's a little bit more. It all depends on the location and what you're doing.
What I found is that a lot of people that are thinking of turning things into rentals when they didn't originally buy it for a rental property, usually they're trying to shoehorn something that doesn't really fit right, because they, like in the example I just brought up, that person in Port St. Lucie, it was all psychologically about the numbers and whether he was winning or losing based on what he paid and what he had into the house, and not looking at the risk or the long-term implications of what he's trying to do to, quote, get that money back.
Right.
And he actually probably will end up in the long run that from the time he rented it to the time he sold it versus what he could have got if he had just not rented it at all, I don't think there's going to be a net positive for them. And they're an out-of-area landlord that's paying a property manager to run the property. They're going to have costs of fixing it up before they go to sell it again, unless they just give up, which they could have done that when they originally had it on the market. So they go through all this pain and then they get a result that isn't what they wanted at all. So here are some tips, I think, about trying to become a landlord or not. We had a customer recently that came to us that was thinking about keeping the property or renting the property. So the easiest math to do is to find out if you have a mortgage and if you have an HOA or condo fee or not, right? You add all those costs together, your monthly costs, and then you figure out how much, if you were to put the house on the market, how much it would sell for today and what you would net. And then you would take the monthly profit that you're making and divide it into what you would make on the rental, the monthly profit on the rental, and divide that into the amount of money for the sale of the home of what you would net. So just to make it easy, because I just didn't, if you could make $100,000 on the sale of the home right now, and you're making $500 a month, keeping the property as a rental property, right? How many months would it take you to
make the same
recoup
profit
back the $100,000? And in that case, how much would that be? 20 years, right? I think
200
200 months, right? Which comes out to what?
It's not quite 240 would be 20 years. So
okay, so 15 years. So it would take you 15 years to make this money. You could take the money right now, or you could get drips and drabs, and that's assuming you have 100% rental rate over that 15 years. That you have no extra repairs that are going to pop up, which is impossible.
Right.
Because over 15 years, you're putting on a roof or
Something.
AC or water heater or everything. And now you have a 15-year-old house that doesn't have any updates for 15 years, right? So all of that comes into play. You have higher insurance,
Maybe.
right?
Maybe.
Most probably, right? Maybe not.
maybe
Okay.
not.
And
But
then
I still
wait.
own the house.
but wait, and here's the other thing.
Oh, wait, there's more.
Yeah, there's more, and people forget about this. Homesteading. You
Mhm.
lose all your homestead, and then if you sell it 3 years after you live there, if you can't show that you lived there 2 of the last 5 years,
Lose your portability.
you lose. Well, not only do you use your portability, in this case,
Oh, the capital gains.
the capital gains. Now, if you make a profit on the house, now you're paying capital gains tax, which you wouldn't have paid if you sold the house and not turned it into the rental, try to recoup the money back. So there's a lot more costs involved. And what most people do is, when I had that one person come to us about renting or selling, he was going to have to wait like 10 years, 8 months before he made all the money back if he just sold the house now. And he's like, I don't want to do that. I just take the money now. And most of the time, that's the right way to go, unless you bought the property for an investment to be a rental and you based it on the purchase on all the numbers to make it a profitable rental situation.
Right.
And now you're deciding this thing's been such a cash flow money cow for me. Maybe I do want to keep it extra longer time or something, right? And you could do it that way. But have the plan. Don't become the accidental landlord like this guy from South Pasadena. This guy doesn't sound like he's in good shape at all.
Mm.
I assume he has a mortgage because he has insurance, because most of the people out there, if they don't have a mortgage, they're probably not insuring the house right now, unfortunately. So he has insurance. He rented it for 9 months. He's renting it again. He's throwing furniture into the house now to rent it furnished, right?
Right.
So there's cost there. It just sounds that there's going to be a lot of costs. And his market specifically, because of all the problems with the hurricanes and everything, that whole Tampa-ish area is one of the worst real estate markets in the country right now. So it isn't like you're having, that there's going to be this boom of appreciation coming. That's not happening right now for that
I
area.
guess it can only go one way at this point, though, right?
I don't even know anymore. It's so hard to predict. The Swami is over in a way.
Yeah, so that's the critical question, Jim. So when am I going to be able to sell this house for them and make the money that I want to make? Maybe that's it. That like the answer to that is, well, what do you need to sell it for what's that number? And you say, well, okay, when our home's going to be worth that much in this area? I don't know. You better be prepared for a 10-year window of time. Or something like that.
People that short sailed, people that did not short sale with us and took the low mod versus the short sale when we were doing all that stuff back in the day. I used to sit down with them and I would say, Mike, you owe $450,000 on your house and it's worth $200 right now. Do you want to keep the house? Do you want to sell the house? And if he said, I want to keep the house, right? I'm like, it's going to take a long time for this house to be right side up again. So if you have another financial problem, you have no safety net, right? And he would say, no, I want to keep the house. And a lot of times they had good reasons. I don't want to take my kids out of the school system was a big reason. And I understand that. It's bad enough that you're in trouble with your house. And now you're telling your family, hey, can't go to school anymore. We got to move. Right. But what I saw is the people that did the loan mods, if they kept the house, they had to keep the house 10 to 12 years in order to get their money back, quote, money back. But the ones that couldn't hang on that long, they didn't hardly make anything for staying there as long as they did. And they probably would have been better off just ripping off the Band-Aid and selling the house back in the day and then just start over again and reset.
Yeah.
So don't make the mistake that these people are doing. Don't become the accidental landlord. Have an intent of being a landlord if that's what you want to do. And find somebody who can tell you what the options are. There are cases where being the landlord makes sense. There's a couple people I met last year. And I'm like, you're in a beautiful world. You have no mortgage. You're going to be making $1,500 a month right now, like $18,000 a year net, right? So if your AC blows, you only make $12,000 that year, right? Still not bad, right? So those kind of people, it's like, hey, the world's your oyster. You want to take the money now, or do you want to keep going with the house that you got? And sometimes there's good reasons for it. But the point is to have the plan and not just do it for any reason.
Yeah, or be forced into it and just not have the margins and the numbers work in your favor for sure.
But I didn't even think about the insurance thing until I read this article that you better budget for how much renters is, insuring a rental property is going to be versus normal rent. I wouldn't even thought about it.
One thing though, if it's a condo, it's a simple, like if you're occupying the condo and then you decide to rent it, all you have to do is tell me, and all I do is just endorse the policy to be tenant occupied. And it might be an extra $150 or something like that.
So condos are a lot because you're not insuring the building and everything.
Right.
Yeah. And you're not insuring the contents anymore.
Yeah. I mean, you're going to bring the contents down. I mean, even if you are insuring, like you are renting it furnished, because sometimes condos you rent them, that's probably more common. even if you are renting it furnished, the endorsement to change it to tenant occupied is not a big deal. It's not a huge cost.
Awesome.
Another thing that Ross said that made me go, huh, that's interesting, was the amount of carriers that do Airbnb being limited.
Oh, yeah.
That's crazy to me, considering either there's not as much Airbnb as I thought there was, or all these Airbnbs are only going to like a couple of carriers, or they're not insured properly. One of them.
No, they typically they're getting that short-term rental policy. There's some carriers that use, they kind of have a package for that already.
Interesting that it's such a limited market for that interested, that at least the companies are interested in.
A lot of times, though, a lot of people get that on a commercial policy. A little commercial kind of, because they're operating a little business.
It just must be the riskiest type of rental, I guess, huh?
It is, because you got some people, you got a lot of people going in there that creates a lot of different people that creates a lot of liability. You got people that are going in there that don't care, don't care about it.
Yeah, it's
it's not there. Yeah, it's like a hotel. They don't care.
Right.
So they're not concerned if anything is broken, damaged, whatever. So it's a little riskier of a policy for sure.
Because a longer term tenant does have that little bit of care, like, hey, I live here. And at least you hope they have that bit of care.
Yeah, like
right?
if I put a hole in the wall, I'm probably gonna fit. If I put a hole in the wall in the place that I'm renting for the year, I'm gonna probably want to fix it before I turn it back over.
I'll hang a picture over it until I'm ready to leave.
When I was in college, in my dorm, I accidentally left the stove or the iron on the ground.
Oh no!
And it created, in our little dorm, little burn mark of the iron. And when they came by to do the inspection, I just kind of put the garbage can over it.
Yeah.
Like, all right, you're good to go. Awesome.
Awesome.
we had my first
surprised you had an iron.
My first bachelor pad was a house that I
How else are you gonna make grilled cheese?
Seriously though, right? Was a house that I lived in with my mom, and she moved out, and my landlord watched me grow up. So he was like, yeah, you can move in with your buddies.
Big mistake.
So one night, me and the other responsible one, and I use air quotes, we walk in and there's a normal gathering of heads in there, and we got the kegerator at 18. I mean, it's just the perfect environment, right? The fireplace had this 2-foot brick layout in front of it, and they stacked so many perfect little cylinder shaped logs, filled the fireplace with it, that it got like lava, white hot. It was so full that it spilled out like lava, right? Over that brick overlay and onto the carpet, a few feet out into the carpet. We walk in and we're like, what the morons? What do we? That look on that landlord's face when we did that walkthrough was, I made the worst decision of my life.
Oh my God, that's so funny.
Oh, it was so bad.
And you're a kid, you don't.
That's
don't
probably
really
one of the rules. You
understand
don't rent to
stupid kids,
a group of 18-year-olds.
Oh
Yeah.
man, I don't care.
That isn't some applications do have a question: are you renting to students?
Okay, yeah. So, what state was that? Was that California?
It was, yeah.
Was it cold, freezing winter or something? Why would you do that?
Yeah, well, we used the fireplace. Yeah, it was nice. We don't rarely turn on the heater. You know what I mean? We use the fireplace. It would get a little cold, but why would they do that? Because they're idiots, Mike. Because they're idiots, and the responsible ones weren't home.
Okay.
Well, at some point, I'd be like, "There's enough wood in there."
These were friends of yours?
You have to fill every roommates. Yeah,
Hey,
people
surround
ride or
yourself.
dies. Yeah. Birds of a feather.
So did you get your deposit back?
Oh yeah. All of it.
You got every time. So let's go ahead and take a break, Johnny. On the flip side, we're going to do a shout out. I forgot. I forgot a whole shout out, and he's in the room, and I forgot to do it.
Wow.
Yes. So we're going to do a shout out. We're also going to talk about something you just mentioned. Remember, you said I don't know how many with all the Airbnbs out there. I just read a story in the New York Times that's telling us where all these big rental corporations that are renting all these properties and keeping regular people like you and me from buying homes, right? Because they're beating us out. I got some actual stats of what's happening with that all over the country. And we're going to talk about who are these big landlord companies and really how many do they really own in the areas. It's kind of interesting. I was very surprised about the numbers.
Excellent. We got lots to get into. Plenty of time remaining. Still May 2nd, all Saturday today, by the way. 45 minutes remaining on this Saturday. 2 hours of infotainment. You're welcome to join us toll free at 877-927-6969. Of course, if you're not comfortable on the radio, but you sure need to get in touch with the team, I'm talking a team of pros, experts in their field. You get them all one click away, floridatalkrealestate.com. We're on Facebook and YouTube. Consume away and hit the share and like button because you can change lives, including your very own with the pros of Florida, talkrealestate.com. We do a 4-minute reset. We're back at it. Thanks for being with us every Saturday right here. It's Real Radio.
No one gives a big warm hug like us when you need it. Come on, get in here. Tell your smart device to play Real Radio 92.1 on iHeartRadio. What? Here's the latest with weather on Real Radio.
Temperatures are climbing, and they are climbing quickly under a mostly sunny sky. We'll see temperatures getting into the middle and lower 90s this afternoon, so quite a warm afternoon. Heat index values getting into the upper 90s when you factor in the humidity. We are expecting rain chances to increase tomorrow, bringing temperatures down to kick off your work week.
This report is sponsored by Lowe's. Spring into deals at Lowe's. Get select 1.5 gallon annuals hanging baskets, 2 for $15. Plus, get 3 free bags of Miracle Grow 0.75 cubic feet garden soil when you buy 3. Valid through 5/6. Excludes Alaska and Hawaii while supplies last. Selection varies by location.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rao from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rao will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rao, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
The Anajar and Levine Accident Attorneys Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Make us the #1 preset on your car radio and on the free new and improved iHeartRadio app. Listen for all your music, radio, and podcasts. Free never sounded so good. Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Yeah, go ahead. Dial in. I dare you. 877-927-6969. Questions, comments concerning the world of real estate there? You got it. If you want to be involved in the conversation at hand, go ahead. You want to bring something else to the table? Sure. You're more than welcome. Right, Jimothy?
Absolutely, 100%.
That's what I'm talking about. Thanks for everything you do for us, my friend.
Thank you. And you know who else we need to thank? We need to thank our postal carriers. Next Saturday is Stamp Out Hunger.
Oh, is it?
So if you have any unperishables that you can leave out for your mail carrier to take back to help feed people that need food, that's a great thing to do, let me tell you.
Yeah, put them to work. Yeah, that's awesome. So we should be seeing the flyers, and they usually leave a little bag, or they try to. Maybe they don't do it quite as collectively anymore, but
I'm not so sure about that, but I know the date is next Saturday.
Next Saturday. So leave out a bag of non-perishables by your mailbox there, and they'll donate it. That's awesome. We should put out another reminder next Saturday.
Yeah.
Write that down.
Okay.
All right.
Will do.
You rock. Johnny C, that's me. Mike Rao, he's the mortgage guy from the mortgage firm. Definitely going to leave out a bag of non-perishables.
Bag or box, I'm reading.
Nice.
Yeah.
You can do a box.
Just leave it next to your mailbox.
That's it.
Boom.
And they'll happily take that.
Saturday, May 9th. Stamp Out Hunger. Food drive.
Do it.
Yeah. Why not?
Excellent.
Getting that stuff that's about to expire?
Exactly right. Or the expired stuff.
Yeah. Or the expired stuff.
Yeah. That's what I do.
I saw a video trend about people going through and look at expired. I can't help but think it's inspired by that. I don't know. There's a Geico commercial.
Geico or Progressive?
One of those. Where the ants in the house, right? Expired.
Yeah.
Expired. Started a whole new trend.
That's a good run of ads. That was Geico. Yeah, with rat in the attic. Round and round.
Yeah,
that was good.
Round and round.
Yeah, that's funny. Ross Cameronetz, he's with Brightway Insurance, Juno Beach. How are you, my friend?
I am well.
Excellent.
See, insurance can be fun.
Of course it can.
Right?
Yeah, you have fun with it every day, don't you?
Oh, so much.
I know your office tries to have as much fun as possible. How you doing on your goal, by the way? Because we have Brightway Insurance, Juno Beach has a goal to save you guys a lot of money this year, but it requires people reaching out to see if they can save you some money. How's that working out so far? It's May 2nd, Ross.
Yeah, we're at like 125.
Wow.
That's progress.
Yeah.
That number changed dramatically.
Yeah.
So you're 125, it's a $500,000 goal.
Yeah.
So you're exactly a quarter of a way through it, 4 months into the year.
5 months, but yeah.
No, 4 months.
4 months.
Oh, I guess 4 months. Yeah. 4 months. Yeah.
So
you're
you're
there.
a little bit behind.
Yes.
Because you only got
3.
Oh, yeah, that's a third. I was thinking
yeah.
it's a
So we're a
quarter.
third of the way through. So
you got some catching up to do.
we do. That's why we need help.
Yeah,
Call us.
Yeah,
You're paying too much.
It's that easy. That just tells us you all aren't shopping your policy with Ross. They're trying to save you money, not by cutting your coverage, not by bare bonesing you. It's about making sure your apples to apples are possibly having better coverage. I think I have slightly better coverage while saving like $900 a year.
Yeah, I mean, one thing that we've been able to do is give a lot of people that have limited water damage coverage now, save them money and give them full water damage.
And I think that's what I did, if I'm not
mistaken.
So, yeah. It requires you to reach out. FloridaTalkRealEstate.com. Simple, painless. You'll have answers, options, quite possibly. But hey, if you're not into saving money, it's not for you. If you
Some people just aren't into that.
Yeah, some people are like, I'm just too busy.
I mean, if you want to spend more than you need to, call us anyway.
We got a policy.
I'm more than happy to help.
We can make it more expensive if you want.
Never
call us.
Yeah.
I never framed that potential. Yeah, we can take care of you too, actually.
Ross doesn't talk about the other chart that he keeps track of.
Do we screw him in half?
Yep, we've got a policy. If you want to pay more money, we got a policy for that. If you want to pay less money, we got something for you. Yeah.
When is a good time to make that call, Ross? Like when my policy's ending?
I mean, you can do it anytime. You can do it anytime. Anytime. Your policy renewed 2 months ago. Call us today. We can always cancel it, get you a full refund.
And I lose the money that I paid for the other policy?
You do not. You get a prorated refund of the unused portion of the premium sent directly to you.
Look at these softballs.
Yeah, and at that point, you just need to make sure your escrow is going to be in good shape. But that's on you to do the right thing with that money, y'all.
Totally you got to give it back. You can't go on vacation.
Yeah. Woo! Jimmy D's right over here. That's Jim DePolo with the Florida Home Pros team, Keller Williams Innovations. Hello, Jimmy D.
Hey, thanks for doing the shout out because that's what I was going to do. I forgot to say I was going to give a shout out to Ross for saving people $125,000 in their insurance. So thank you so much. Also, don't forget to mention that auto insurance has pretty good savings too sometimes. So
yeah, that 125 includes auto insurance too. So
yeah. So if you have auto insurance needs, even if you don't own a home or something, give Ross a call. He might be able to help you out, get a cheaper insurance. We all know that we need to save money right now. It's a pretty rough economy.
Oh yeah.
Nothing's
getting cheaper.
No, nothing.
Unless you
right
reach
now,
out to see
nothing's
if it
getting
can.
cheaper.
Yes.
Yeah,
You got to be
cheaper.
proactive about saving money.
You do.
Yeah.
It's not just going to happen.
You don't just stumble
you
into
have
it.
to.
Yeah.
If there's any contractors out here listening, you got your commercial auto, your commercial liability. And I know you need to save money, so call us. We can help you with that too.
Oh, I didn't even think about that. I'll do that to our vendor list, Ross, and let people know about that. I didn't even think about that.
It's not just contract. There's there's a lot of vehicles that have decals on them. You know what I mean? So it's not just the
fleet.
Yeah, it's like fleet stuff. So
I was just saying, like the
cleaning services and that type of stuff.
Yeah, absolutely.
Yeah, all of those.
I want to get into a little bit more about landlording, but on the bigger level, there's a federal government regulation they're trying to pass that institutional landlords, I'm calling them institutional landlords, and we'll get into what that means. They're trying to reduce the amount of homes that they can own and rent out to give regular people who want to just buy a home and live in it more opportunities to buy. So they're trying to block them out.
I remember the headlines. Was that an executive order or was this legislation they're trying to pass?
It's legislation, and it looks like that everybody signed it, and they're just waiting for the president to sign it now, is what I think.
So they've actually passed
it's
something.
coming along.
So they're trying to get the horse back in the barn, is that?
Yeah, but you're going to be surprised when I go in the stats. Okay, but before I do that, I just wanted, there was a guy, I'm assuming it's a guy, it might not be. I apologize for just assuming that. But there's a person that came from YouTube, not me. That's the person's handle. It's not me. It isn't not me. Yeah, it's a person named not me.
Not you.
They were just mentioning a couple of things that I don't agree with at all, so I'm just going to bring it out. The first thing is they were saying that that Florida has the highest foreclosure rate than any other state. That part is true. However, I just did the foreclosure stats yesterday saying I haven't done this in a little bit and maybe it's dramatically increased. So I did it. So we have 54,000 properties for sale on the market right now in our regional MLS. Out of the 54,000, here's the real stats. There were 340 foreclosures and short sales for sale out of those 54,000 properties, right? Now, the other thing that's important to know is that I put in how many houses are already owned by the bank that are being sold, right? And how many auction properties there are, right?
And this is just our region, though.
Yeah, just our southeast MLS, right? So basically from St. Lucie down to Dade.
Gotcha.
Okay.
Big population, though.
Now, so I put in auctions, already in foreclosure, meaning that the bank owns it and they're selling it. Houses that are, quote, in pre-foreclosure, and then short sales, which is a different category. All of them together, when you add all those together, we jump from 340 to 1,222 homes out of 54,000. That's 2.6%. That is normal range of foreclosures and short sales and everything in a normal market. So all this, that Florida has the highest foreclosures in the state, that's true, but they're still historically within the norms. And before, 18 months ago, we were historically low. Now we're historically normal. So it took us all that time just to get to a normal foreclosure rate because the real estate market, as far as foreclosures, has been very strong on the side of the homeowner, meaning they're not getting in trouble on their mortgage as much. So just wanted to bust that myth because I just
Florida,
think it's important.
Do we have more than other states?
We do.
Though?
We do. I hear that Colorado is starting to catch up to us pretty good. I don't know why Colorado, but we are the number one, and that's basically because of that Tampa area I was talking about.
Okay.
That's the foreclosure
Capital.
of ground zero of
Yeah.
all the foreclosures in the country.
I was thinking it when you were saying it. I'm like,
Yeah.
all right, well, our area is pretty healthy. It's a
Yeah.
good population. It's a nice cross section of maybe how the state's looking. But I know there's areas that are in trouble, and we touched on it earlier.
And like,
And maybe it's another piece of evidence. Like, think back what happened before, but foreclosure rates aren't always about the economy in general, like maybe income's down or whatever it is, or unemployment's high. It's really about home values. And when your home value starts to decline for whatever reason, people find it easier to stop paying their mortgage.
yes,
you know?
that's true, because they almost like gave it up because
Yeah.
they're tight on their mortgage payments. Like, well, I'm never going to get out from under this. And some people just stick their head in the hole and just hope.
Which was like back in the day in 2008.
Was
That
4 out
was
of 10
the
homes.
prime driver of why
Yeah.
people were like, whatever.
Yeah. So I mean, it isn't a horrible foreclosure rate. You're not going to hear me talking like you see on YouTube where they just scare the bejesus out of you, like the whole universe is collapsing. That's not really happening in this market right now.
The whole stuck with the house and don't know what to do part of this show.
There's always people.
There's some of that.
There's always people that are stuck with the house and they don't know what to do. They have divorce, death, disability, moving for relocation, and they weren't expecting it. All of these things that could happen in your life, moving because your relative needs you in a different area. You didn't even expect that to happen. All those things happen in real life. And there are programs out there and ways to help you. Don't stick your head in the hole. Give us a call and we'll get you to the right people. If it's not selling the home and you want to, quote, save the home, we just talked about that. And we can show how to make that happen for you with free advice. To give you free advice, to give you the options you want, and then you go on the path that you choose. But the second thing that we're not going to get into the second thing because we'll get into that later. So let's talk about this. I thought this was really interesting. So the New York Times did a study of how many institutional, large institutional landlords there are in the country. And what the definition of that was owning at least 1,000 properties, right? So if you own 1,000 properties, you're considered a large institutional investor. They want to reduce that down to 350. From 1,000 to 350 would make you a large institutional investor.
Why?
Because
not?
they want to have regulations that you can't own too many rental properties. They don't want somebody coming in with large monopolies just coming in, because the theory is it's decimating the regular people that want to buy and can't.
So the premise is, with limited housing inventory,
this is the fix.
The people should have an opportunity versus the company.
So this should have been in place a long time ago, but we're trying to get the horse back in the barn kind of thing.
So you restrict who can buy a home. And I don't, like, 1,000 seems like a large threshold.
A big
350 individual properties owned also seems like a large threshold.
It does.
But there's got to be some part of like the apartment buildings or condo buildings or something like that, which, 350 units, you could own one building. It would put you over the threshold.
Mm-hmm.
Something like that. So, okay.
Interesting.
All
right.
This apparently is for single family homes, Mike.
Oh,
okay. Just good point.
Oh.
He has an excellent point. Mike's so analytical all the time. You gotta love his brain. So it's mostly they're trying to block about the single family homes. Okay. Now, here's the thing. If they decide that 1,000 isn't 1,000 properties, let me see.
They won't lower it. They're going to keep it at 1,000.
Okay. No, let's say they lowered it from 1,000 properties, makes you a large institutional investor, and they reduce it down to 350 properties, makes you a large institutional investor of single family homes. How many, because that's increasing the amount of institutional investors, right? Because you have a lower standard for that.
Yep.
So the 350 standard, what percentage of single family homes are owned by these, quote, large institutional investors across the United States? What percentage? of the single family homes do you think are owned by these large?
I could be completely skewed. I want to say it's a low percentage, single digit percent. So, 5, 6%.
I was thinking in the teens.
Teens?
2.
I was at 5. Man,
he said 5 before I did. So
0.59%.
Oh, wow.
0.59.
And that's reducing it down to only 350 homes and not keeping this standard at 1,000.
So my instincts, what did you say, Ross? 2%?
2.
So this is kind of a waste of time.
Ross,
Well,
Ross
that's the
Ross
thing.
won.
It's perception versus reality, right? So this regulation feels good, right? It's a feel-good thing. Yeah, they're fighting for the regular homeowners, and I'm not being bought out by these investors.
Gotta love feel-good legislation.
I felt like it was happening too. I would have thought 5% or something. I really thought it was like a big chunk, but it isn't. But here's the catches to this, because some people could be like banging on their tables like, well, that's not the whole picture. So let's talk about the whole picture. So here's a couple of things to remember. The markets where landlords have 350 properties or more is in the Sun Belt, right? So Florida, Georgia, North Carolina, wherever the Sun Belt is, right? All of those areas, that's where the most institutional investors are, okay? And they do account for 3% of that area Sun Belt. So in the Sun Belt, even though it's 0.59% across the whole country, in the Sun Belt, 3% of the homes, single-family homes, are owned by large institutional investors.
So Ross was way off.
So yeah, exactly, right. So 2%, so 3%, and then if you actually go in, like they looked at Atlanta because it's in the Sun Belt, and then they picked 4 counties within the Atlanta area, not the whole state, and they found out that in those 4 zip codes, it accounts for 12% of all the single family homes in those 4 counties.
So there's little pockets where you're going to be like, oh, that company owns, that's a company, corporate home.
Yes.
Corporate
So
home.
it isn't across the board saying this is a nothing thing. It depends on where you live.
Yeah,
I would imagine like
impacts
in
it differently.
bigger cities, you would probably have more.
And is this law like really well thought out where they've said, listen, this is a per census tract restriction or a per zip code or per state, or is it just a national? And then how do they deal with shell corporations?
Right.
And trust.
Oh, and
Yeah.
here,
Blind trust.
Yeah.
here's a couple
Those are
things
my
they already
favorite kind.
found out.
I like that one.
Between March 2024 through January 2026,
Yeah.
portfolios for landlords with fewer than 100 units grew. So landlords that own 100 units or less were still buying properties.
Does that
increase-
include the landlords that own 0 units?
I would assume so,
Yeah.
right? But because
That's a huge
they're
number.
wannabe, right? They're wannabe. But with landlords that own 1,000 or more, what's considered the large institutional investors now, they actually shrank. So the big boys are walking away from this and they're selling their units now. And it's the smaller ones that are continuing to buy. And what they also found out is a lot of the large institutional landlords, they sell to other landlords. They don't sell to the regular public that much. So it's big boy landlords selling to a smaller potato landlord is what's happening. It isn't going big boy landlord sells to me, right? Like as a person that wants to move into the house. So all these are little tiny squeezes, but here's where they also gave where the biggest areas are. Okay, like where the big areas of this happening. So number 1 is Atlanta. So Atlanta, remember I told you 12% of the homes, 12% of the single family homes are in 4 county are owned by investors. Statewide, citywide is 4.2%. Okay, for the city. Dallas, 1.7%. Phoenix, 2.2%. Charlotte, 3.4%. Now we'll get to some Florida ones. Tampa, 2.6% of the homes are owned by institutional investors. Orlando, 2.6%. Jacksonville, 3.6%. And Miami, which includes Miami, West Palm, and Broward, 1%. Only 1% in our South Florida area, which I thought was kind of interesting because it's 4%, which is the highest in Atlanta, In our metropolitan area, it's only 1%. So we're not seeing this as much as other parts of other major metropolitan areas. We're just not seeing it as much.
Interesting.
So I just thought that was kind of interesting. So the idea that these landlords are just gobbling up everything and taking over the world, it isn't really like that. But if you're in certain pockets, you're going to feel the squeeze. But it isn't across the board. So I feel like a lot of this regulation stuff they're going to try to do.
Maybe it's headline type stuff, but I was just reading about it. And so it's, it did start as an executive order, but now it's something with bipartisan support, which is like almost unheard of in this environment. So I guess it can't be that bad, right? Unless you're an institutional investor.
Well,
like, wait
right. The institutional investor is going to be really upset, feel like you're controlling my industry for no reason. We're not doing anything wrong. That's going to be their argument. You're just making it harder for us to exist.
Well, but they're just changing the way they categorize you as an
how many you
investor.
can buy. There's going to be restrictions on how many you can own and things like that. I don't have all the information.
You can't own more than 350 single family homes.
But something tells me they're going to break it up and
super loophole.
Make it so that they just have separate LLCs.
Yeah,
for
that's
certain
probably
ones,
true.
And then still, have the same amount. But I think the one important thing that really surprised me is how low that number.
Yeah, the number's just super low. It's like, wow, I did not.
The headlines.
Yeah, compared to what
the
projection.
I did. Yeah, I would have thought it was a lot higher. I was like, wow, I didn't know this stuff. It's
Well,
pretty
if
good.
you think about you and your friends and family, like I've only rented to a landlord I knew, right? Hand them the check. I've never rented. I've never known anybody that rented from an institutional, a big investment firm.
I have three buyers right now, or just recently closed buyers that are all living in institutional investor owned rental properties.
Oh. Ross bought a home from an institutional investor, right?
Well, I bought from Zillow.
Yeah,
they were buying
there. That's right. When they were losing all that money.
I don't think they were in the rental game. Were they?
They owned single family homes.
Well, it was a condo.
I think what it comes down to is home ownership. We talk about home ownership, the American dream, buying a home, and it's because where you're going to live, and this is the thing. And it just so happens that owning a home in America has always been a great investment decision for the individual, right? Just because your home's going to appreciate over time, and it's like, so that's our thing. Like that's the people's thing. Like it's a house, you got to live there, whatever. And it just turns out that it was a really good investment, and I was able to advance through life and make money on my home. Like that's our thing. You guys, you big companies, stay out of it. Right? We don't need you. You got so much other avenues of making profits and investing and everything. Like leave this thing to us. So I kind of, I guess get behind the spirit of it.
There's a lot of investors that serve a purpose, a good purpose for the community. For example, like when you have a totally abandoned, beat up home and nobody wants to buy it, just sitting there for years, and that happens. Okay. Then the investor comes in, buys that at a price where they can fix it up, turn it into a income producing property based on taxes for the community, because they fix it up, it's valued more. Somebody moves in, now they're paying a higher tax bill. So they're also, by fixing it up, you're helping all the industry people that are the people that make the supplies, build the supplies, install the supplies, all the contractors and all that.
Local economy.
Yeah, it just there is a lot of benefits to it. But not all the time, but it isn't as bad as everybody's thinking it is, unless you're in certain pockets of the country. So just remember that when you start reading these headlines, and I just thinks it's funny that the one thing that we have bipartisan support for is something that's probably not needed.
A non-issue, perhaps.
It's like, thank you guys. You guys are just rocking it,
crushing it.
I wonder why Congress is at 12% approval.
There is definitely a tradition of passing laws to protect against problems that don't really exist, or should be like local issues, and you just make it national.
So
why not?
I wanted to just talk about interest rates just really, really quick, and then get into another guess what's happening. We're going to try it again. So interest rates went to 6.30. They increased a little bit, Mike. What it went 6.23 to 6.30?
Yeah, exactly.
Yeah, I did that off of memory.
0.07 increase.
Yeah,
week over week.
So that means you pay 3%, 3 cents more, 3 cents, not 3% more on your mortgage payment every month.
But that was only a little dip up from like a 3-week downward trend.
Yes. So,
which followed a 4-week upward trend.
Right. So what the point of what the interest rates are telling us right now, we're still in that low, 6 to 6.5%, not even 6.4 something percent. We're still in that range.
And I definitely see headlines that put the most positive spin possible on the movement and the rate. So we went up last week to this week, but we're still at like, a 16-week low. But when you stretch out the average long enough, we're at the low point in that window of time. I'll see headlines like that.
Well, if you bring it back to 1981, we're rocking it.
Killing it. Yeah.
Yeah, really.
We're saving 11%.
Historically.
We're saving 11% right now. This is awesome.
But I had somebody who closed this last week, and she was very kind of like rate sensitive and watching it. And she had a longer window, and initially her instinct was to float the rate, meaning like, I think things are going to get better. Let's just hang tight. We're not locking. And so then we got to a point, I said, there's so much volatility week over week, day over day. Like this was it's an unusually like moving market day to day, just because of what's happening in the world. And finally we got it locked in, but still, even then she's like, hey, has it gotten better? Because, we have a float down policy. Meaning once you've locked in, if the market shifts in your favor sufficiently to meet our kind of parameters, we can float down the rate, meaning we'll go down to that day's market, and take advantage of the downward movement. And every day she would call and she's like, I'm hearing this. I'm like, well, no, it's up. Like, I'm looking at the 10-year right now. It's like, we're up from this morning, but I heard this. Well, no, I'm looking at this, right? So there's just this weird, like, what's in the public space versus what are you actually seeing day to day?
I don't understand why the media, being a former media person, I don't understand why there's such a big disconnect of what's really happening with the interest rates. What the public thinks is happening, versus, which is Mike's whole point, versus what's really happening is so divergent sometimes. And I don't understand why it has to be like that. It doesn't make any sense to me, because what is the benefit unless they're really trying to stoke up business for the industry? But why would the media want to do that?
It's
the benefit, because that isn't the way it worked when I was around.
Right. You've turned into like if you use the word influencer now, and it's like a label for somebody who's out there making money on the internet, like people watch me because of what I'm doing, but there's always been influencers. And so somebody is basically, hey, let's get the word out about this particular thing. I don't know who that is or how they get it out, but some sort of, publishing or publicist or something. And they're like, hey, this is the information. We're going to plant this seed and then see how people run with it. Right. So there's somebody behind the marketing effort.
I just don't understand that. So what the takeaway from that is, as far as interest rates, the reason why we haven't talked about it much, other than we were in the 5s 5 weeks ago or 6 weeks ago, when we were in the 5s at 5.98. Other than that, and when it went up, it got to 6.47. So it was a half a point, but we never really got above that. And then it started going down, even with all the hoopla going on in the world. So here's the other thing you need to know about interest rates. Don't expect them to go down, because there has been a big fight within the Fed. They said it's the most raucous meeting they've ever had in since I think 2018 or
I think they
something
had
like that.
3 voters dissent from holding the rate steady.
Yeah. So what they're saying is there are people on the board for the Fed Reserve that are saying it isn't fair to the public to let them know that not let them know that we're considering about increasing the interest rates, not dropping them, because of what's happening in inflation and the volatility with oil, and that they don't know what's happening. So the idea that this is just inevitable, that we're going to start getting rate drops from the Fed, which doesn't necessarily mean that we're going to get rate drops in the mortgage rate.
True.
But the bottom line is don't count on that, guys. You should count on the interest rates we got now, because this might be the best, as good as it gets, for the next short-term future.
We have learned, as through the years watching this, that the Fed is pretty much watching 2 pieces of data. They're watching inflation. They're watching unemployment, right? Those like the main things. So are we moving into a world where inflation isn't the primary driver? There's some other primary driver that they're making their decisions on. And I just like, is that possible that that's shifting?
Yes, of course, because we're heading into stagflation right now.
Well, and
that
we,
definition of what you just said, where things are more expensive and we have a weak unemployment, which also means weak productivity for our GDP. That's the perfect storm ingredients to make stagflation.
Well, and we have a braking mechanism on economic growth, and that's debt just surpassing GDP. That is just slamming brakes on growth.
Yeah.
So the only thing they can do is cut rates to hopefully get that trickle down to kick into effect one of these days. But the reality is we need to fight inflation probably more so.
We actually had one other period. I just read this 2 days ago. We had actually one other period where the GDP was less than the debt. World War II, right after we got to World War II, we were at 102%. So we were 2%. We were taking in 2% less than what our debt was at that time.
46, I think was
now
the
we
record,
fixed it.
Right.
We fixed it. So it means it isn't like it doesn't have to be inevitable. But what I'm afraid is, I feel like we're back in Groundhog Day. This is what I'm worried about. That whole stagflation period started because of our fight with Iran. If you think about it, right? That whole thing was the fall of the Shah and everything. And then the whole world had an oil crisis, and OPEC's falling apart right now. OPEC's, one of the members just said, we're out, right? Which kept all those prices pretty stable. If everybody's on their own, that's not going to be very good. I feel like
if everybody's on their own, that means the dollar's just dangling too. We need OPEC to prop our currency.
Yeah. So I just don't know what's going to happen. So the thing is, you got to keep an eye on all that. But if you're waiting because you think interest rates are going to go down, that it might. I'm not telling you it won't.
Sure.
But I wouldn't be betting on it. I wouldn't bet my house on it, if you will. You know what I mean?
How much would you bet?
How much? What's your risk assessment?
2 cents. I'll bet 2 cents.
But there's a fight in the Fed though, and that's interesting.
Yeah. So, and we haven't really heard that. So this is going to be a very interesting time. I'm hoping that we pull out of this, but remember during Biden's, the last president, they kept talking about economic soft landing, and we kind of got down to just basically 3% inflation from 9% inflation without taking any big economic hits, trying to get it down to that price. But now they're thinking that there is no soft landing. It's either going to be full out recession, and not a good one, not a mild one, or we are going to skate out of this, but they don't know how. So that doesn't give me a lot of confidence.
Well, there's a lot of planting the seed of the mentality of, well, it sucks, but it's worth it.
So I want to do a guess what's happening segment. I'm going to try one more before the end of the day. Okay.
Guess what's happening.
So I had a couple. They wanted to sell their home. It was a rental property that they had for a long time. And when the tenants left, they weren't really happy about the condition and the shape of the house. Plus the roof is over 20 years old. Okay. So they were thinking about selling it to a We Buy Houses Fast for cash company because they didn't want to deal with the roof, and they thought nobody was going to want to buy this house. But I saw it differently. I saw a house that was more modern in the neighborhood than most of the other houses. I also noticed that it had a more modern floor plan. So a lot of the homes in this neighborhood had only carports and the 8-foot ceilings, and the kitchen blocked off from the living room and dining room, kind of not open floor concept. And this house had all those things. Plus it had a 2-car garage.
Nice.
So we decided that we were going to put it on the market significantly higher than what they were going to get from an investor. I did go to the investor route for them because I wanted to show them that I wasn't trying to convince them to do something that wasn't, in my interest. So we brought out one of the big We Buy Ugly Houses kind of companies, and they came in and offer lower than I even thought they were going to turn in, which I thought was low. So we put the house on the market for almost $100,000 more than what the investor was willing to pay for it. Okay, we put it on the market last Tuesday, and we had 18 offers. Okay,
Offers.
we had 18 offers.
How 18
Not
showings?
showings.
No, we had over 30 showings
Wow.
in 3 days.
Offers.
And more than half of the showings made an offer.
Yes.
That's a good stat too.
So, out
Did
of
you have
those
to clean up? Did you have to do anything?
Thank you, Mike. So what I recommended that they do, oh, well, we don't have enough time for this. Okay, what I recommend they do is they make it marine clean. Okay, just marine clean the house and that's it. That's all I want you to do. Don't do anything else to the house, right? Don't paint it. Don't do anything. Just
You're talking
clean it.
Marine Corps, not like Ocean Life.
Yes, Marine
Okay.
Corps, like U.S. Marine.
got
Quarter bounces off the bedspread. So anyway, we put it on the market, 18 offers. 2 were investors. Okay. Let's say we put the house on the market for $450, which is close to what we put the house on the market for. The investors came in at $330 and $391. Okay. What was the price that we took on the house?
18 offers. I say full price, $450.
$491.
Oh,
485.
455. Got a little bit more.
Ross is cheating.
wow.
He isn't
cheater.
cheating. He's just a good guesser.
Was it his sale?
We put the house on the contract at 485 something. There was hundreds of dollars involved, but 485.
Wow.
Almost $40,000 more than what we listed it for.
That's great.
Okay. Right now, the average home gets 95% of list price. We got 105% of list price in this market.
That's great.
Why? Because we showed value in the home and let the buyers naturally raise the price up. We got the house sold in 3 days. Okay. It took us 5 to get in contract because we had so many people we had to talk to, but we sold the house in 5 days in this market. We also are going to get what I believe is going to be the appraised value for the house. So I don't think that we're going to have to worry about being overappraised value, but we're going to get the appraised value for the house. And we did it by undercutting the rest of the neighborhood, showing value, and let people pull us up in price. That's a really great way to do it in today's market.
I'm so glad they reached out to you instead of just going directly to a we buy play. Oh man, that's a great story.
And does that conclude our second edition of this week's?
Yes. What's
happening?
And that person saved, basically compared to the investor offer, they made about $140,000 more than what the investor was offered at that time.
Beautiful.
And didn't touch the house.
Did they cut you in on the extra profits?
No, I don't do that.
You could make a clause.
It's a beautiful story to wrap it up on a Saturday. FloridaTalkRealEstate.com is your resource to an entire team. We get remarkable results more times than not. That's what happens when you work with people that are great at what they do. There's plenty that are good at what they do, lots that suck at what they do. But good's just not good enough when you're buying a home, selling a home, stuck with a home, you don't know what to do. You need professional guidance. You need the best of the best. And at least if you have a shot at it, it gives you a good shot, right? Check out the team, vet them, interview. Make sure that they work out for you. I'm telling you, you're not going to find any better at what they do. Like Mike Rao, the mortgage guy from the mortgage firm. Have a great weekend.
You too, everybody. Enjoy this. I don't know if it's going to be too nice out, but enjoy it.
I will do my best. Ross Camarinets, Brightway Insurance, Juno Beach. Always appreciate you. Have a great weekend.
Thank you too, everybody. Have a beautiful weekend.
And Jimmy D over there, Jim DePolo with the Florida Home Pros team, Keller Williams Innovations. Have a great weekend. Thanks for all of your efforts always.
Thank you. Happy South Florida, everybody.
Jimmy D, you the man.
You the man as well. Johnny, thank you very much. Mike, Jim, Ross, always a pleasure to be with you guys on a Saturday. Have a great week.
If you're on Facebook with us, thank you. If you're just listening, thank you. If you are on Facebook and YouTube, make sure to share and like. You can absolutely change lives, including your very own, by putting somebody on the pros of FloridaTalkRealEstate.com. Know it, use it, love it, share it. Write it down, y'all. FloridaTalkRealEstate.com. We're back next Saturday. 2 hours of infotainment. Stick around. Locker Room is going to squeeze out some sports next, right here on Real Radio.
Bunghole.
Bye.